We're with David Ranson. So, what do you think? Where do you think the economy's headed?
Sideways, I think now. We've had a spectacular recovery from the pandemic. I'm trying to watch the latest figures, some of which are not in widespread circulation yet. The best latest figures are not even mentioned in newspapers as yet, but I'm seeing a complete rebound from the economy that we had before the pandemic. In fact, back to the old trend, not even just to the level of output that we had at the end of 2019, but to a higher level, reflecting the trend growth of the economy. And that is essentially almost happened already. We're in the middle of the second quarter. It'll be done by the end of the quarter. And I think from here on out, there's no scope for any further supernormal growth. We're going to be going flat sideways. It's going to be, I would say, stagflation.
So sideways. What about those who say, we got 12 to 18 more months of this? Meaning, there's all this money in the system, funny money. It's like a sugar high. Maybe we get another 12 to 18 months of this.
Well, I'm skeptical about the money too, but my reasoning is different. I don't think the money that the government has put into circulation or the spending that the government has made, sending out checks to families and all the rest of it, whatever case there is for it on a humanitarian basis, I don't think it has speeded up the economy one bit. In fact, I believe it's slowed the economy down.
How so?
This is something I do a lot of work on. It's not just an opinion. I'm trying to work on the evidence for the linkage between how much the government spends, how much money the government creates. We have decades and even centuries of data on this, certainly decades. And we have very recent data on the last year, particularly during the pandemic. It does not show that so-called stimulus leads to more rapid growth. It shows quite the opposite.
What data do you go to prove that? I've heard that before. Lacey Hunt always says that, and certain people I've heard over the years have said that. But how do you prove that? Because we've been indoctrinated sort of from birth that FDR saved us from the Depression by spending all this money. So I think it's ingrained into our psyche that when there's a crisis, we got to spend money. When it was 2008, we had to spend $900 billion. When it was coronavirus pandemic, we had to have President Trump and President Biden spend over $9 trillion, along with the Fed collectively, to get us out of the COVID mess. And it does seem like it has a less effect. I mean, I would say it's because it's defying capitalism. You don't have creative destruction. You don't have good companies getting better. You have a government money going to companies that should be shut down or bankrupt, or, they should use the bankruptcy laws to reinvent themselves, reinvigorate. But what do you make of that? Because it is ingrained that we wanted, even in the, like in the pandemic, nobody's saying. There was one Republican that they called, what was his name? Thomas Massey. And they called him, I think the president at the time called him like an expletive, because it was the only Republican who said, hey, let's not spend all this money. And they said, oh, he wanted to have a floor debate. The guy's a jerk. Get him off the stage. So what do you make of that? Like in a pandemic, it's like in a foxhole, there are no atheists. In a economic calamity, there are no Austrian economists or something like that. What do you make of that?
Well, people believe what they want to believe. They don't believe based on the evidence. And you have to be pretty trained to even analyze evidence in an impartial way. People are very strong in their beliefs, far stronger than the facts justify. I would recommend a book, by the way. I think it's a book. I came across it a few years ago. Henry Morgenthau was the Secretary of the Treasury for the Roosevelt administration, and he wrote memoirs. at the end. I think he might have written them before the Second World War or maybe just after the Second World War. But he came to the conclusion at the time, this is after the Great Depression, up until the point that the war broke out, he said it had all failed. And that was the Secretary of the Treasury of Franklin Roosevelt. So it isn't true that everybody believed that the government spending during the Great Depression was a great success. I'm afraid, it's a myth. I certainly don't see evidence for it when you go back to those historical statistics, but it's something people so badly want to believe that they do believe it. And it becomes so powerful a belief that it engulfs all of us.
And what is the evidence for that? What data points would you point someone to if they want proof of that?
Well, I haven't worked on the 1930s, but I have worked on the post-war period, for which we have about 6 decades of data. And I can show what I've done for myself to satisfy myself that my opinion has a base. I've plotted the amount of money spent by the government each year. This is the federal government. And I've also calculated the amount of money spent by the private sector, including state governments, each year. And then I look for how they're correlated. And they're correlated negatively. The more the government spends, the less the private sector spends, and vice versa. It's back and forth. The total amount of spending doesn't depend at all on how much the government spent, except to a very small extent, it's less. The more the government spends, then the less the total spending turns out to be. And this is based on the historical data.
And where could I find this, or where could our listeners? Where could our listeners look this up?
Well, I've written all of this stuff in my own papers, but you mentioned writing a book. I've never had the time. Writing a book is an enormous project, a multi-year project, if it's going to be a decent book. There's no possibility I can ever do it, particularly now at my age. But I have written these things up in papers. The clients for my papers are financial advisors, banks and insurance companies, pension funds, basically asset managers who pay for quality research. And there's a big market for quality research, and I'm a little tiny participant in that market. But the general public doesn't get to see this stuff at all.
Man, so where do you get, so do we have a white paper we could give away, we could buy? I want to help you distribute this.
Anything, yes. I am trying to get the widest possible audience for this. I'll never succeed, but you're very welcome to anything I've produced along these lines, and I'll send you an email and
yeah, if you could send it, because I really want to get this out. More and more people want to know it. We got to take a break. We'll be back after these messages. And folks, call us at 888-988-JOSH. And if you schedule and keep your no obligation review, we'll get you this white paper. Fascinating. I mean, I'm going to make it available. David, we're going to make this, we're going to take this national. Because you always hear this and people go, you know, that's some talking point from this party or that party. What I love about you is you're like just the facts, ma'am. There's very little, there's no fluff, you know. And I love that about you.
I really believe that's the only way you can be. That's the only way I could stay sane.
No, we need to try to be objective.
It does seem like an awful lot of people, including my fellow economists, all belong to a certain point of view.
Okay, so we'll take a short break, folks. 888-988-JOSH. We'll be back. 888-988-JOSH. Call us, schedule your no obligation review. 45-minute strategy session. 888-988-JOSH. 888-988-JOSH. We'll be back after these messages.
The preceding program was sponsored by the Jelensky Advisory Group.
Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jelensky or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at www.jelinsky.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jelinsky and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Advisory services offered through Wealth Quarterback LLC.